Today, Nebius Group stock, trading under the ticker NBIS, surged 16.14% during regular trading hours and closed at around $112 per share. This massive move caught the attention of many investors across the AI sector. In today's video, we'll break down why NBIS jumped so sharply, what the company does, how the stock has performed over the past year, what analysts expect going forward, whether the valuation still makes sense, and the key risks investors should know. Let's start with the biggest question. Why did the stock surge today? The rally was primarily driven by a major strategic partnership announcement involving the world's leading AI chipmaker, Nvidia. Nvidia revealed it will make a direct $2 billion strategic investment in Nebius to accelerate global AI cloud infrastructure. This is a huge vote of confidence because Nvidia sits at the center of the AI ecosystem. Its GPUs power most AI training clusters. When Nvidia invests directly in an infrastructure partner, investors often see it as a strong signal the company will play a major role in the future AI supply chain. But the Nvidia investment was not the only catalyst. Nebius also received approval for its first gigawatt-scale AI factory in Independence, Missouri. This facility is expected to host up to 1.2 gigawatts of compute capacity. Gigawatt-scale AI infrastructure is extremely rare and represents one of the largest data center footprints being built specifically for AI workloads. In addition, Nebius reconfirmed that it already has more than $20 billion in pre-sold revenue pipeline with major technology companies, including Microsoft and Meta Platforms. That level of contracted demand provides strong revenue visibility through 2026 and boosted investor confidence. Now, let's talk about what Nebius actually does. Nebius is essentially an AI infrastructure company. It builds and operates the physical and software backbone required to train and run large artificial intelligence models. Through its platform called Nebius AI Cloud, the company operates high-performance GPU clusters in its own data centers. These clusters allow AI developers to train large models, run inference workloads, and deploy production AI systems. Nebius aims to provide a full-stack solution across the entire AI lifecycle, from raw data processing and model training to deployment and scaling in production. The company has an unusual origin story. Nebius was formed from the international assets of Yandex Envy after the company divested its Russian operations in 2024. The remaining international business was reorganized into Nebius Group, now focused on AI infrastructure and global technology services. Besides AI cloud services, Nebius also owns other ventures, including a Ride, which focuses on autonomous driving technology, and 1010, an online education platform focused on tech training. From a stock performance perspective, NBIS has been one of the most explosive AI-related stocks over the past year. Over the last 12 months, the stock has increased by approximately 340%, reflecting massive investor enthusiasm around AI infrastructure. Now, let's look at what analysts expect for the stock. According to consensus estimates, the average 12-month price target for NBIS sits around $154 to $155 per share. That suggests roughly 35% upside from the current price near $112. However, analyst targets vary widely. Some bullish analysts see the stock reaching as high as $232 if the company successfully scales its infrastructure and captures a large share of the AI cloud market. More conservative estimates place the stock closer to $108 to $120, roughly where it trades today. Those analysts believe the current valuation already reflects much of the expected growth. Looking further out, multi-year price targets are less common, but analysts project Nebius could reach a revenue run rate between $7 billion and $9 billion by the end of 2026. If the company achieves that level of growth, the current valuation could look far more reasonable. Speaking of valuation, let's break down how expensive the stock looks. NBIS currently trades with a trailing price-to-earnings ratio of over 800 times earnings. That extremely high number reflects that the company is only beginning to generate meaningful GAAP profits. Because of this, many investors focus on price-to-sales ratios. Based on projected 2026 revenue, Nebius trades at a forward price-to-sales ratio of roughly 8 to 12 times. That is higher than the broader tech sector, but somewhat comparable to other high-growth AI infrastructure companies. The company's market capitalization is currently around $28 billion. So the big question is NBIS still a buy after this huge rally? The consensus among professional analysts still leans toward a strong buy or moderate buy. The bullish argument is that Nebius is one of the few publicly traded pure-play AI infrastructure companies. It already has contracts with some of the world's largest tech companies, and now has direct backing from Nvidia. If AI demand keeps expanding rapidly, infrastructure providers could see enormous growth. However, there is also a cautionary perspective. Some analysts believe the stock may be entering a melt-up phase, where prices rise extremely quickly due to excitement around a major technology trend. If global AI spending slows after the current investment boom, the stock could face a correction. Finally, let's talk about the key risks. First is capital intensity. Building gigawatt-scale AI data centers costs billions of dollars. As a result, Nebius carries a relatively high debt-to-equity ratio of around 1.06. Second is customer concentration risk. A large portion of projected revenue comes from a small number of large customers, including Microsoft and Meta. If any of these contracts were delayed or canceled, it could significantly impact the company's outlook. Third is execution risk. The company plans to scale from hundreds of megawatts of compute capacity today to potentially more than 3 gigawatts by 2026. Building infrastructure at that scale is a massive operational challenge. Finally, the stock is highly volatile. NBIS has a beta above 2.0, meaning it tends to move about twice as much as the broader market. That can lead to big gains, but also sharp pullbacks. Overall, Nebius is one of the most interesting companies emerging in the AI infrastructure space. Strong demand, massive data center expansion, and partnerships with industry leaders have pushed the stock dramatically higher. But like many high-growth AI stocks, the opportunity also comes with significant risks, especially around valuation and execution. Thank you so much for watching. If you found this analysis helpful, please like the video and subscribe to the channel for more updates on fast-moving stocks and major developments in AI and technology. I'll see you in the next video.